Trump's victory spurs a revival of corporate deals. Welcome to Market Insights. I'm Peter Devlin. US companies forged more than $35 billion in deals at the start of the week, varied in both magnitude and diversity. The surge in deal-making marks the clearest signal that enthusiasm among US executives is beginning to return, as many expect a more M&A-friendly environment under Donald Trump. So is the art of the deal now the market's new guidebook? We'll tap into that and more. I'm joined by Anna Macdonald, Investment Manager for Aubrey Capital Management. Welcome, Anna. Thanks very much for joining us. So let's start with the deal making. And do you expect a boom coming after years of lowered appetite for transactions?
Well, one could be forgiven for thinking so, given as you said, there was such a manic Monday yesterday for mergers. I think it's worth remembering, though, that deals are a long time in the gestation. Trump only came to victory on the 5th of November. So there has actually been, it's not like these deals happen overnight. People have been thinking about them for a long time. So whilst I think there is a more lighter touch regulation expected in the US, and there's generally seems to be a return of what we call animal spirits, just general bullishness. It's not like these deals happen overnight, and they all happen for different motivations.
Let's take a closer look at some of that Manic Monday merger deals as well. Omnicom has agreed to buy Interpublic Group, creating the world's largest advertising company. Are we likely to see more efforts like this from companies facing pressure from tech companies and AI?
So what Omnicom hopes to do by merging with Interpublic is they will generate quite a lot of cost savings, but also they think they can there redeploy those into better AI tools and so on. But it's still going to be quite a fraught deal, I think. It's a people business, very much so. And so they might lose good people, and they might therefore lose also clients that would go with them. Omnicom's wanted to be here. The CEO, John Wren, has wanted to be the biggest advertising agency for some time. So I don't think it's a major surprise. The last deal, talking about regulation, that they tried to do, the last big deal was with Publicis, but that was a decade ago. And the world has changed, not just with the tech landscape, but also in terms of how John Wren sees the future.
Let's switch now to Oracle earnings after the bell yesterday. They did disappoint investors. So the company has previously warned investors that a ban on TikTok would hurt its financial results. So should companies bank on more pro-business Trump decisions?
Interesting point. ByteDance are a big customer of Oracle's, and Oracle have been helping them with their move to AI. And so that is a threat if TikTok were to be banned in the US. We're yet to find out whether Trump's going to follow through on that. The implication, the way he's behaved in other respects, would be it would seem a surprise. But remember that ByteDance is ultimately owned by a Chinese entity.
Closer to home now, an Ashad Group. It struck a blow to UK markets as it proposed moving its primary listing from London to the US. Is this a smart move for the company?
Well, there are a few motivations behind it, I think. First of all, you've got to remember that 90% of Ashad's business is in the US. Sometimes we say that companies want to relist in the US because they would command a higher valuation. In fact, Ashad do trade at a slightly elevated multiple compared to their biggest rival there, which is United Rentals. So that's probably not the motivation. It probably is because the CEO is a resident there, and I think there's been quite a lot of shareholder dissatisfaction with the size of his potential pay packet, which UK shareholders have been advised by proxy bodies to vote against. And I think when you compare it to how much US CEOs might be rewarded, it's not seen as outrageous. So I think that might be another motivation.
So finally, Anna, takeovers of London-listed companies are shrinking the UK stock market at the fastest pace in more than a decade. Are we likely to see more delistings ahead?
Unfortunately, I think that might be the case. We are seeing companies, particularly smaller companies, are vulnerable to either other companies taking them over or they're being taken over by private equity. And private equity seems to have a lot of ability to make more of these deals. Banks are willing to lend to private equity, and there does seem to be a lot of enthusiasm to take over some of these, particularly smaller UK companies that are trading on low valuations and are suffering just increased selling pressure as people continue to withdraw funds from the UK.
Anna Macdonald from Aubrey Capital Management, many thanks for your thoughts. And that's Market Insights. Don't forget, you can watch more videos on Reuters.com.